Good morning this Wednesday, the 17th of January. I'm Grady Wolf, market analyst with Bell Direct. Wall Street closed the first trading session of this holiday-shortened trading week lower as investors assessed the latest batch of fourth quarter earnings results alongside rising bond yields. The Dow Jones fell 0.62%, while the Nasdaq dipped 0.2%, and the S&P 500 ended the day down 0.37%. The benchmark 10-year Treasury note jumped nearly 12 basis points to 4.068%, following Federal Reserve Governor Christopher Waller indicating the central bank may ease monetary policy slower than Wall Street first anticipated, which prompted investors to sell equities in favour of government bonds. In Europe, markets closed lower again as investors digested comments made at the World Economic Forum in Switzerland. The Stock 600 fell 0.3%, Germany's DAX lost 0.3%, the French CAC fell 0.2%, and in the UK, the FTSE 100 declined 0.5%. We've also seen the European Central Bank indicating rate cuts may come later than first expected, similar to the US, which is hurting GDP and economic growth in the region, especially for the likes of Germany, which are on the edge of technical recessions. The local market has started the week in the red, with the ASX 200 ending Tuesday's session down 1.09% as utilities and energy stocks weighed on the market, and every sector closed the day in negative territory. The supermarket giants weighed on the market yesterday, with Coles falling 2% and Woolworths sliding 1.5% after Australia's competition watchdog said it would not hesitate to take legal action against a big supermarket chain for breaching consumer law, which comes just a week after Labor announced a review of industry codes, telling supermarkets to pass on lower wholesale costs to consumers and not price gouge at the checkouts. Australia's consumer confidence data slipped in January as Aussies remain concerned about financial pressures following 13 interest rate hikes out of the RBA since May 2022. On the commodities front this morning, oil is trading 0.81% lower at $72 a barrel. Gold is down 1.34% at $2,027 an ounce, and iron ore is down 1.5% at $131 a tonne. The Australian dollar continues to weaken against the greenback, with one Aussie dollar buying 66 US cents, 96.94 Japanese yen, 52.21 British pence, and one New Zealand dollar and 7 cents. Ahead of the midweek trading session here in Australia, the SPI futures are expecting the ASX to actually open Wednesday's session up 0.05%, and that's despite the negative sentiment across global markets overnight. And now let's dive into some trading ideas for your consideration today. Bell Potter has maintained a buy rating on Coventry Group and increased the 12-month price target on the Industrial Supply and Services Group from $1.45 to $1.80 following the release of a first half trading update, which overall was ahead of Bell Potter forecasts, including the anticipation of first half sales growth of 5.4% year on year and pre-leases standard EBITDA to lift 18.1% after the company implemented a range of buy and sell side margin initiatives through the trade network early in FY24. And Trading Central has identified a bearish signal on Sigma Healthcare following the formation of a pattern over a period of 7 days, which is roughly the same amount of time the share price may fall from the close of 95 cents to the range of 84 cents to 86 cents, according to standard principles of technical analysis. And that's all we have time for this morning. Have a wonderful Wednesday, and as always, happy investing.